Warriors. Let's have a great week. I'm sure we'll get your questions, Sumen. You have a great guest I'm looking forward to talking to. Rohit Shrivastava is going to be with us at the top of the hour. His Twitter handle is at India Charts. I went to his website. Looks like we're going to get some compelling ideas coming out of Rohit, so looking forward to that. Stick around for that. Just want to show you guys some active pattern and plays. Andre's got a nice harmonic pattern working in the pound. I'd like to see his targets achieved with what I'm looking for in the dollar. And Greg has got a trade. He's down a bit. Blake bought Canada great last week, and Stelios is the most patient guy I know. I think that we're finally going to get something there. You can't see my screen? Joe, it's up there. Can everyone in there see my screen?
I can see it.
Okay, thanks, Joe. All right, thank you, Blake. All right, so let's take a look at the markets. Friday I talked about, I liked the euro on the dip that we had Friday, had a nice close. This was the close, nice candle. Following through here. I know a lot of people are still looking for one more flush, but I think they could begin to squeeze these people, head up to 1860. Some of the more bullish targets are more towards 120. Dixie kind of has a little head and shoulders look to it. Left shoulder head, right shoulder neckline here. So remain negative as long as we don't take out Friday's high. That's really the key. We get through Friday's high, and we're going to probably be looking at 97-ish would be my guess. So a little head and shoulders here, which might lead to the weekly head and shoulders, right shoulder being formed down here. That's my view on the dollar. I'm a little surprised S&Ps aren't making a little hay out of this weaker dollar. They look, you know, primed to reverse. I think they will between here and 28.30. I know that's a big range, but still think that we're going to have something like this to clean out all the bulls going sometime late summer into the fall. That's going to set up a huge buying opportunity. But I think they have to flush a lot of people. Down here, a lot of people are going to be talking bear market crash, because a lot of stocks, even though indices are at new all-time highs, are down 10% or more. The banks are still acting pretty sickly. I'd say that the financials are a pretty important sector in the market, and they're not close to the highs. And then you move to something like tech, and with NASDAQ blowing to new highs, right? Here you go. Just want to show you some of the underpinnings in the market. Although price action looks good, we are diverging here on the weekly, and NASDAQ at new highs. Also on the daily. And just to show you something here, one of the strongest groups when the cryptos were strong were the semis, right? Because you needed that to mine Bitcoins. And take a look at the semiconductor ETF. Since January, hasn't made a high, and then with this recent big rally we've had in S&Ps, still looks pretty weak. Okay, so although we've rallied in the indices, still looking for shorting opportunities there. You would think that gold should get some type of bounce. I think it's bouncing a bit today with a weaker dollar. So this is, if the metals are ever going to put on a bear market rally just to get rid of, you know, extreme bearishness that we have in the market, I think it's got to get going this week. Maybe it bottomed like the dollar did on Friday. It's up a couple dollars today. As you can see, this last low did not confirm on the daily. See that? It's only a 2 driver, but sometimes 2s work. You know, I would think a natural place for recovery in gold would be back towards 1270 to 1280, since this was a pretty important breakdown. So those are just a few things that I'm looking for during this week. You know, I just want to call everyone's attention to how much you really get being part of our family, because you go to most services and it's usually one or two guys. Okay, one or two guys, but you look at the whole team and it's a pretty potent combination, right? Blake, Grega, Stell, Steve, Stop Hunter, Amanda, Joe, Andre, and all the different analysis that you receive every time you're on our site. You really, when you're at your dashboard, you don't even need to go to your Twitter. So I have to sign in. So you don't even have to go to your Twitter feed. You could have your own Twitter feed right here while you're watching your favorites, you know, looking at the tweets. So the only other place you have to go to is your trading platform to execute. I don't think there's anything here, not here, or Steve would have had it up here. Anyway, I encourage you to join because Face is free. And if it's helping you and you're learning and you get some pretty good actionable ideas in here, the way to say thank you is to join us. And then after Face is over, you have somewhere to go, or you could be in there right now, like what's happening in our subscriber chat room. So that's my look in the beginning of Monday. Thank God it's Monday, Blake.
Really? You say that?
Really? Yeah, after you've gone through what I've gone through, you know. Yeah, it's good to see. And it's always, you know, we made it through the weekend and here we go. We're fortunate to have building a great business, and just trying to look at the positives before I go back and take a nap after Face is over.
So how's your weekend?
So good. I started swimming a little bit. You know, what else do you do in the high desert? Fine. And, you know, watch the game. I missed the consolation game, but, you know, I'll tell you something in soccer, you can't turn your head. You think, you know, things have slowed down, and you go outside for a minute, you come in and you've missed 2 goals. So that's how it was for me during the championship game yesterday.
Well, I ended up missing it. My youngest son, who is my athlete, and kind of a sports fanatic, if you will, him and his brother stayed the night over at their nephew's or their cousin's house, and so I actually recorded the game, and we were going to watch it when he got home yesterday around midday, but I glanced at Twitter on accident, saw that France won. Yeah. And so I didn't tell him. I went to pick him up, and he's like, do you know who won? I'm like, yes. He said, well, I saw who won too. And he goes, do you want to watch the game? I'm like, well, I was going to watch it for you. And, you know, I was trying to avoid everything so I could watch the game together. And, you know, I was already spoiled because I knew it was already ruined for me. I knew who won the game. And he's like, well, you know, since I already know who won and you already know who won, do you really want to watch it? And I'm like, not really. He's like, so
you didn't either.
I missed the game. Yeah, I specifically recorded it so we could watch it, and you know, and then I just ended up catching the highlights later. So so I actually missed the game, which yeah, which is it was very anticlimactic considering that, you know, watched so many games this World Cup. So anyway,
it was a great cup.
Yeah, it was, and I'm sure it was a great game on over the weekend. So, but it was for me, it was a pretty slow weekend. I tried to relax a little bit, but you know, the markets are, you know, very sleepy right now, and we've had let me pull up the charts. So the euro dollar just basically stopped at the 618 retracement. You can see the euros just pushed right up to the 618. I did. If you watch the week ahead video, I was expecting a dollar at the beginning of the week, which, obviously we're at the beginning of the week, but we had a lot of reversal candles on Friday. So you saw the hammer on the euro dollar. The pound also had a big hammer. So to see upside follow through right now shouldn't have been, if you watch the week ahead video, this shouldn't have been a surprise. So, when I got up this morning and I saw the euro dollar trading about 117, I'm like, well, that figures. Now the question is, what do you do from here? And I don't know if I would be buying the euro dollar right now. Now, can you short it? It's up to you. If you guys think that the dollar is going to continue to gain some strength here, I mean, it's entirely possible. I'm not doing it personally as far as shorting the euro dollar, but I think it is it's a possible trade here. I also could imagine that we see a little bit higher levels from where we're currently at. I mean, we could see as high as 1750 today. I think that this is entirely possible up here, but I'm not standing in the way just yet. These are the days, especially you're going into being in full swing summer holiday season in the markets. This is the time that you want to get too aggressive, especially if you're going to trade counter trend. We do have retail sales today, which I don't know if it's going to be a huge mover. The biggest event of the week is going to be the Humphrey Hawkins testimony tomorrow and on Wednesday. So, the market might be fairly quiet until then. I do think if we get an extension up into the 117.50 level, I would be willing to take a counter trend euro dollar trade up here. I think because if you look at, let me just draw that out a little bit. If you look at the hourly relative strength here, we're already overbought, right? So let's imagine we got up towards this. You can see there's like a nice little. This is very, a lot of confluence up here. So I think your risk is very manageable if you tried to short the euro dollar up at around the 117.50 level. Maybe it stops right now. It might, but I think if you can get it a little higher, another 30 pips higher, that would be the place that I would look for a short, because then that would put relative strength. Imagine RSI here. Let's imagine the hourly RSI would spike up towards like this, 80, and then you can, and then you can look for a bit of a reversal. So I think this would be a better, from a risk reward standpoint. The question is, are we going to make it up there? Is it even possible? And I'm not sure. One thing that I tried to do on Friday, and I was. I don't want to say I was like super successful, but I did buy silver on Friday, like right here at 1574, I think is where I bought it. And I already sold it this morning. I got out of it at 1580. I just took a little bit off. But if gold and silver can find some support here, which gold's at really key support right where we're at, maybe that might produce more of a, if we get a continued move higher in gold or continued bounce in gold and silver, that produce a continued dollar weakness. But the flip side is, if you look at gold, and I'm just going to be a little bit more specific here, gold is trading below this major trend line right now. And if gold starts to break down, that might actually reverse the euro dollar. Because, sorry, I'm yawning a lot this morning. I actually slept for me a full night. I think it was like 6.5 hours of sleep, and I should feel more rested than I am. But if you have gold selling off, that could firm up the dollar. It could gold and the dollar tend to have a pretty inverse relationship. So, you know, if gold breaks down, the dollar might actually start to firm up across the board. So this is a risk because gold is walking a very fine line at this point. It really is. I think gold's at risk of dropping here. So so anyway, that's just a little view about gold. Let's take a look at some of the other majors. So we have the euro dollar. Like I said, the euro dollar is pushing up against the 618 currently. Might make it a little bit higher, I think. But then again, maybe we just end up stalling here. The cable pushed up towards. This has been a nice little reversal, but I think that we have this big inverted head and shoulder pattern that's trying to play out. The one thing that does worry me about the cable a little bit is that the pound, I would have thought we would have reversed already, or at least seen a little bit more bullish price action by now. And it's scaring me that we haven't. And I'm not long the cable. I felt I missed the trade on Friday when it dipped down to 131. I knew this was going to be support down here. If you use ForexAnalytix, and I don't know if the analysis is still on there from last Thursday. Since the early trend has been a slow bleeder, lower 131 is support, and the line in the sand is 130.50. So, you know, when we were down here on Friday at the 131 level, I felt like I missed the pound and I missed the big reversal because the comments that President Trump had Thursday night, early Friday morning, really had pushed it down towards the 131 level, and I felt like I missed it because by the time I got up, we were already trading at like 131.50, and I'm like, well, if we get another dip down there, I'll buy it. It never happened, and it ended up unwinding everything that you know, when Trump made those comments, it ended up reversing everything by the end of the day. So anyway, I think that the 131 level is going to be really key for bulls. But the comment that I was just trying to allude to here is I'm surprised the cable hasn't really broken higher. And also keep in mind, there are a lot of headlines that are you know, being released regarding the UK and Brexit that are really messing with price action here. So I think the pound, if it's going to rally, it's going to rally soon. If you take a look at the Aussie, we also have a nice little inverted head and shoulder pattern trying to play here. You can see that it's like a complex head and shoulder pattern with a neckline that is it's slanted. Still have a lot of work to do there. The Kiwi is still trading very heavy. The Kiwis, I think this, if you want to see a currency pair that's very closely tied to gold, I think it's the Kiwi. And if gold breaks down, the potential for the Kiwi to try to reverse out of this very, and this is a daily chart, and actually I should take you over the weekly chart. The Kiwi's chances here, if gold starts to break down, are very low for a bullish reversal. I think if gold breaks down, then the Kiwi natural path of least resistance is going to be lower. So, and this is one of those currency pairs that I think if you're long, you have to be a little nervous, in my opinion. The dollar Canadian, I actually bought a little bit this morning. I still think that the risk is below 130 if we get down there, but I think that we will stall. I think we're going to stall shy of that. Also keeping in mind that gold is weak, or crude oil is weak. So, you know, if crude oil continues to sell off, that should weigh on the Canadian currency, and the dollar Canadian might actually get a lift. And you know, stocks have been very strong here, but if stocks start to show some signs of weakness, then that can also weigh on the Canadian currency. The U.S. dollar, Swiss franc, we challenged this high. I think we're going to bounce right off this this triangle support here, and try to make a move back up for this double top. But this is, you know, if we start breaking down, then we're putting in a much bigger top, I think, if we start to break down from current levels. So in other words, if we get down below 99.50, that's not going to be a good look for this particular currency. The US dollar Mexican peso, I am a buyer. The closer we get to 18.50, I really want to be a buyer down here. I'm already starting to nibble on it a little bit. I've already picked up some this morning, a little cheaper than where we're at right now. You can see the hourlies are trying to make a lower or a higher low, but I'm looking to add if we drop towards 18.50. Ultimately, that's where I want to be long, but I don't know if we're going to make it down there. I think 18.60 is the place to be long. This is following a big Gartley pattern that has, you know, Gartley pattern completed, reversed, and we've pulled back aggressively. Also keeping in mind that, you know, we just got past a Mexican election where, you know, the current president, I think is very much a wild card. So I think buying the US dollar Mexican peso down here or selling pesos after this pretty strong run from 21 all the way down at, you know, sub 19 levels, I think this is the place that you want to be long, somewhere down here. You know, may not be today, it may be the next couple of days as we drop down towards 1850, 1860. So, you know,
hey Blake, do you think that the Mexican president is more of a wild card than ours?
Yes.
Or is it a tie? Yes, more.
I think. Well, I don't. From what I know of him, I think he has the potential to really shake things up. He is. I would say he's very equivalent to a Donald Trump type of authority or figurehead. Leader, where he promises a lot, and if he makes do on what he has promised, he's going to end up being quite a bit of a wild card. You know, and he could shake up the political landscape for good or for bad. I'm not too sure.
So is he going to renationalize the oil in Mexico?
I don't know about that.
Yeah, okay.
I don't know. But
that's normally what leftists do.
You know, whatever he does, if it is any slight rub to what Donald Trump is trying to accomplish regarding NAFTA, and if it you know, it could end up having a very negative spin on the peso. That's the I think the risk that we have here. So people that have been buying the peso, I think, it was a buy the rumor, sell the news type of event following the Mexican election. Now that we're past it, I think the risk now is for a weaker peso currently. And because I don't think the current Mexican president is going to roll over and die and succumb to you know, the U.S.'s demands. I don't think, and that's where I think it's going to be. It could be quite negative on the peso, and actually, you know, I don't know if Stelios has anything to say about that. He might have some comments for this particular situation, but
hello.
And there he is. I wasn't sure if you were listening in or not. So
I am. I've got the kids' cartoon in the background, but I am listening in.
Sure, it's the kids. Blame it on the kids.
You know that's. I was talking to my brother-in-law, and you know I'm going to be a uncle for the very first time here, for a blood uncle, if you will. And I was just telling him, like, it's really exciting when you have kids because you get to relive your youth once again. And my sister's almost 10 years younger than me, so this has been a long time. I've been waiting a long time to have a new kid. So Stelios, I don't believe it for a minute that it's your kids watching the cartoons. Yeah. So anyway, but regarding regarding
Yes.
the Mexican situation, what do you think about the peso where it's currently trading here?
Yeah, well, we talked about this after the elections, and I said at the time, and I still believe, I'm very skeptical and a bit worried about what's going to happen in Mexico because of this new president, the direction they seem to be pushing, which is very leftist, and they promise a million things, and we don't know what they're going to deliver. So I said at the time, I think the peso was trading at like what 19.5 or something like that, and I said, look, I'm not even looking at it before 18.5. And 1850, it was a level that I was, I mean, let me clear this up from the beginning. My bias is bullish dollar peso. But as I said a couple of weeks ago, I'm not touching it yet because I like most people, I like to find good entry points. And even though I'm not I'm not as good as Blake or Steve or the other guys, I tend to be a little bit early usually. But on this one, I'm patient. And I think somewhere around 1850 is where I'm going to start slowly accumulating longs because I'm, as I said, I'm worried. I'm worried about Mexico a little bit.
Yeah,
so it's not Turkey. It's not Turkey, but it's it's worrying me a little bit.
Well, yeah, and if for those of you that aren't following the lira, I mean, the U.S. dollar versus the Turkish lira has been just a beast. As far as a move goes. So, and I don't trade the lira, but man, it has been just wild. And following the Turkish elections, you can see it's just been continued Turkish lira weakness. So I agree with you, Stelios. I'm down here and I'm starting to acquire some. And as long as we trade above 1850, this is kind of where I've been waiting to enter anyway. So. So thanks for your comments. I appreciate that.
And the other thing is that we have to wait and see what he's actually going to do because he's promised a lot of things. He hasn't actually done anything yet. So we have to wait and see which direction he goes. But anyway,
right.
Yeah, that's my
and as I was telling Dale just a few minutes ago, he doesn't seem like he's a leader that's going to just succumb to US's demands either. But we haven't seen anything yet, so it should be interesting. But hey, welcome to summer trading. You got to look at some of these extreme moves, and in the peso, for example, they're getting a little extreme down here. We might be able to see a little bit of at least a backfilling of some of this downward pressure that we've seen in the particular pair. So we might see some peso weakness coming in over the course of the next few days to a week or so.
Cool.
And thank you, Stelios. Appreciate your comments. And with that being said, I'm going to bring in my colleague, Steve. Steve, are you here?
Hey, good morning. I am.
Good morning, Steve. How are you?
I'm good. How have you been?
Good. We have retail sales coming up in a couple of minutes. How are you feeling about that?
How I feel about the retail sales.
How do you
make
feel
you want
about
to go
anything,
shopping?
How do you feel about it?
Want to go shopping?
We actually have a forecast of 0.45, something like that, if I remember right. Correct?
Yeah,
So,
actually, retail sales here in the U.S. 0.5% month over month, minus autos would be 0.3%. So we're expecting continued consumer strength in retail sales, but we'll see if it moves the needle at all today.
let's see. We are witnessing a dollar pullback so far today. That's the only sure thing. And we got a major rejection from the 95 area on Friday. So I think we might see another leg lower for the dollar, at least in the short term, or at least that's how it looks like. Friday's candle was quite a bearish one. We have to admit.
Right. Absolutely.
Yeah, but in general, I think that the dollar is just like consolidating up here. I don't know if it's a triangle or something like that, but we seem to be consolidating, and add to that summer trading. So quite a choppy market. But we have to go through that as well.
The data will be out in 15 seconds.
Couple of data points. New York Empire State Manufacturing and business inventories as well a bit later on. So
okay, let's see within a few seconds.
Empire said slight beat, retail sales in line.
Yeah, in line, but the minus autos a little bit stronger than expected, actually.
Yeah, so more or
revisions
less,
are higher. Revisions are higher, so more or less nothing, I think.
more or less neutral data then, yeah. What was priced in roughly? Yeah, 0.5 versus 0.5, 0.4 versus 0.3. Revisions, yeah, as you said, Stelio. So, you know, I mean, what the market expected. So we're not really seeing a reaction from here. And keep in mind that both the Euro USD and the pound are, you know, are testing resistance once again. So, you know, we need to see if we're actually going to manage to break higher. I think that if we do, we should see some kind of an extension. And you know, so let me show what I'm seeing here. I do see a flat top triangle, you know, in Euro USD. I do believe that if we break above this, we should extend to the upside. If we break below the support, which is at 115 exactly, we should extend towards these broken descending triangles support. Same deal with the cable. The cable has actually already broken above a descending wedge, but it hasn't managed to penetrate through the 133 horizontal resistance area. To be honest, though, there is another formation that somebody can notice here. It's not like very beautiful, but it is an inverted head and shoulders formation with a neckline roughly at 133 as well. So I do think that, you know, there are still opportunities for the cable to extend higher, but for that to happen, we do need to see a daily close above 133 and let's see what it is, roughly 133.10. Okay, so 133, 133.10, a daily close above it, I think should help cable extend even towards the 136 area. And, you know, we've already shown Euro USD. So they both are attempting to break higher, but they've both failed to do so yet. So, you know, as long as they don't, we have to respect the potential for more downside. But, you know, once that happens, and if that happens, I think that we have to acknowledge that there is a possibility of a bigger rebound. Anyhow, they've been sold off quite severely during the past several months, and now they've been going through a period of consolidation. So, you know, a bigger rebound is not out of the question. Now, one other thing that's actually caught my attention is the structure of crude, because, you know, crude has actually produced some nice downside, and I do think that the previous rebound that we had was a pennant. So I do think that the next stop is going to be at the 68 level. Why? Because that's 61.8 of the last move higher. I do think that the pennant is going to extend somewhat lower. So, you know, 68, also previous support there. You can see previous resistance there. So I do think that, you know, in the short term, we should remain bearish crude for at least one more leg lower before seeing some bigger correction and then determining if that was the first leg of a bigger corrective move and then there is one more missing, or if that was it and then we're headed to new highs. So bottom line, I think more downside in the short term, some kind of a rebound, and, you know, after seeing what kind of structure this rebound has, we will be able to determine where to from there. Let me open the question box as well. There we go. Yeah, I just did, Pedro, actually, before even seeing your question. So it's, you know, probably brainwaves. So yeah, we covered crude. Now let's have a look at silver, because Blake did mention that he bought it. But you know what I don't like about silver? I don't like about silver the fact that it got lower. It then recovered like all of its losses and then some. But what I don't like is that it gapped lower below a horizontal support area. And if it actually doesn't manage to, stay near the highs and we actually end up closing below 1575, I think that this takes silver, one step closer to a bigger breakdown. So I really feel that silver, is very, very close in breaking down. Same deal with gold. As you see, it's barely holding this ascending trend line support. Let me zoom out so you can see it. There it is. So it's barely holding this, and it doesn't look good. Same deal with copper. Copper is consolidating, and holding this horizontal area of support. It's also an inner trend line resistance, then turn support. That's been acting as support once again here. But I do think that this consolidation looks like a continuation formation, right? So I do think that we should see more extension to the downside. The target of this double top is still down here at 256. So copper is also looking very sick. Platinum, attempted some kind of a knee-jerk reaction, but it's getting rejected from previous support, acted as a resistance once again, so that doesn't look good either. And palladium, which is actually within a triangle, and it looks like it wants to extend lower at least once again. So there isn't a single one of the 5 metals I'm tracking at the moment that doesn't look like it wants to break down and continue lower. So I have to admit that, from a technical perspective, it seems like the metals need a little bit of a miracle for them not to, produce more weakness before anything else. And since, I'm not a big believer in miracles, because miracles imply a low statistical chance, obviously I would expect more weakness to be the likely scenario. Let me add here that the S&P is actually closed on Friday right on the 78.6 of the last big leg lower that we had, the one that started in the end of January, the one that was quite brutal in nature. So, we've made it all the way back to the 78.6. There isn't really any other resistance left once we clear that. So, what can I say? We have to maintain a bullish bias until proven otherwise, right? So, let's see if this is going to do anything, this 78.6 area of resistance. But, we've been consecutively breaking slowly. It's a slow ascent, I have to admit. I mean, it doesn't produce, it hasn't shown any clearly impulsive characteristics yet. So this is one point for people that expect, one more leg lower. But on the other hand, we've been steadily, one by one, breaking through each area of resistance. And, we've been holding the previous area of support quite nicely every single time, or almost every single time. So, being cautiously bullish makes sense, at least from a technical perspective, right? In my opinion, the level to watch here is 2690. As long as we trade above 2690, having a bullish bias is, the way to go. Nasdaq once again produced a new high. There is a bearish scenario about Nasdaq. Actually, it has been playing out beautifully in this bearish scenario. Actually, we drew that when we were back there in June, and I haven't touched it yet. I haven't adjusted it yet. So, a move lower towards this trend line, a bigger wedges trend line. We didn't actually make it all the way down there, but anyhow, we did move lower. Then one more move to the upside to retest this resistance. Keep in mind, this is not really fixed in stone, because, it depends on if you want to take into account the weeks. This is not also fixed in stone, because you can readjust now this trend line support like this, right? So something like that, and you can clearly see that this is an ascending wedge, right? So there is still a bearish scenario, and that bearish scenario is getting rejected once again from this wedges resistance. And, depends on where the RSI is going to be. Coach would probably find a 3-drive formation here as well. I don't know if you're here, Coach. Don't you agree? Doesn't this look like a potential 3-drive? to you. So Nasdaq at new all-time highs. Next upside resistance is the 127% extension of this corrective move lower. We can find that at 7,431 actually. I bet that if we also draw a fib extension from this, we find some targets. So let's see where the 127.2 is. Yeah, more or less it confluences there. So more or less also the 127% extension of this little move lower as well, roughly at those levels, roughly at 7,435. So we're getting near the next area of resistance. Before then, we get another confluence of resistances roughly at 7,570. So these are the upside levels to watch for possible reaction, for a possible bearish reaction in the Nasdaq. But until that happens, still you need to remain, cautiously bullish here. IWM got rejected before reaching the previous high. Actually, we can see that even if it pushed to new highs there, we would have a very clearly defined RSI divergence. You can see it here. So, the IWM doesn't seem to be doing that well, during the past few days. Obviously, the way the dollar has been trading can play a role to that. The DAX is still trapped between two soft support resistance areas, 12,400, 12,600. Whichever of these two break should produce an extension. In one case, I would be looking for 1270 to 12,770. More or less triple confluence of resistances up there at the 61.8. We have the 200 DMA, the 50 DMA. Extension lower should bring us back to this critical area of support at 12,100. So that's a nice, in my opinion, short-term trade. FTSE, nice rejection once again from this channel. Two scenarios were on the table here. One of them, a break above this bull flag, and obviously an extension higher, probably new highs. Another one, a more complicated correction, for example, probably a double zigzag, in which case a rejection and another move to the downside before we can be looking for more upside. Regardless, we're currently testing here a horizontal area of support. So let's see what happens from there. I would really be looking for more upside, and I am constructive on the FTSE, but not until we break above this channel. So I would like to trade to the upside, but only after I get confirmation that it's breaking above this corrective formation. Okay, not until then. But it's something that I'm keeping, a close eye to. Now, I think that one of the most obvious trades here, I also wrote it on the chat room last week, was Euro Yen. I mean, this was very, very clearly defined corrective in question mark move lower. I'm not sure if this was a corrective one or, we're still in some kind of a move lower, but definitely I expected that a break above this channel would at least, produce some kind of an extension, either to this area that we're currently testing, which is a horizontal area of support resistance, and the 200 DMA is converging there. It's just a few pips above, like 30 pips above, or even higher actually to this 134.40 area. Okay, so I'm still monitoring very closely this channel. I think that as long as we remain above it, it's very hard being bearish. I cautioned that if there is one pair actually one yen pair that I wouldn't be short in any way or form would be the Euro Yen, because it was looking quite frothy. Then we got a V-shaped recovery when we got down there and tested this descending trend line support. So, especially breaking above this channel, I think, was quite a nice warning that, there should be more upside. And while, for example, at the same time, the pound yen, was still trading below this trend line that rejected us the previous time we tested this as resistance. And there is still a little chance that it's going to do so now, right? So as you see, when we were down there, I said, there is a decent potential for a rebound and a retest of this trend line, and especially, since it's an ascending trend line, it goes higher, for every day that passes. So, for example, even if we get a little bit more of a move lower and then a move higher, the trend line will have moved even higher. And, in a few days, it will also coincide. The 200 DMA, as you see, is more or less there. In a few days, it's also going to be at the 61.8. So that's going to be a nice confluence of resistances. So, for the pound yen specifically, as long as this is the technical structure, I would be more cautious than I actually am with the euro yen, right? But definitely pound yen testing, quite a critical area of resistance. Obviously, buying it up here makes no sense. If you do believe that it's, instead of getting rejected and moving lower, it's just going to go down, retest this 147.50 area support, which it is a possibility. I mean, if it is to be bullish, it has to do something like this. So I would expect this area to act as support and then move higher once again. So those are the two scenarios now, the bearish and the bullish one. Both of them would probably require some type of a pullback first, even if it's a corrective one, and then a decision of what the pair wants to do. I'm more or less neutral this pair, simply because many of them are still looking bearish, but on the other hand, we've had a major breakout in the USD yen, and I cannot simply ignore that, right? You can see here, USD yen has broken above this descending trend line resistance, and it has done so after a long period of time. This trend line has been tested multiple times from the market, so it's not a trend line that you would easily ignore. To be honest, as long as we remain above 111.50, I would be extremely cautious in trying to be short the USD yen. I think that trying to be short the USD yen, as long as we were trading below this trend line, made all the sense in the world. But it doesn't make much sense anymore. I mean, we would have to see a break below it, and some kind of an acceleration to then just try to view this as a false break to the upside. But until that happens, I think that we have to respect it. So any pullbacks to 111.50, this confluence of supports, I think will give a good opportunity to be buying for a next upside target. I think at this horizontal area of resistance, roughly at 113.20. So a nice pullback.
Great analysis on the end, Steve.
Thank you, Dale. By the way, I was showing, probably you were away before, I was asking you if you think that the Nasdaq is also a nice 3-drive opportunity if we get rejected somewhere here. Let me show you. You remember that we were seeing this as, there it is, as an ascending wedge, right? But isn't it also and likely a nice 3-drive if we get rejected somewhere there, with the RSI diverging, for a third time? What do you think, Dale?
How do you count 3, Steve? Where's the 3?
1, 2, 3, and wherever you get another high, because that's going to be one high here. You see where the RSI is here, right? Yeah. It's above, like close to 85. Then we had an RSI roughly at 74. And, if we get rejected rather soon, we might even get an RSI right at around 70.
Well, sometimes 3s become 3s. So if we're in the third drive, right now I see 2.
Yeah, you mean drive. There might be a 3-drive at the third drive, right, of a bigger 3-drive.
Right, a fractal of the larger formation developing here. That's the way I see it.
Okay, that might be the case, actually.
Okay, buddy.
But it looks like some kind of a topping formation here. Yeah, I mean, potentially.
I mean, you look at the internals, Steve, like I showed the semiconductors.
Yeah. So
that was a leader of the NASDAQ for a long time during the Bitcoin mania, because, NVIDIA, was pounding out stuff for people to do their Bitcoin mining, you know, so the leadership is faltering. I guess the only stocks that are still doing okay are maybe FANGs and Microsoft, Amazon, but Amazon's diverging up here too. So yeah, I could, it's one of those things that's so close I could taste it. I'm always better off sitting on my hands longer than I want to. Do you know what I mean?
Absolutely.
Because I'm usually early. Go ahead.
By the way, speaking of Amazon, just look how bullish it has been, though. I mean, you know, it broke out of this triangle and actually once again accelerated. I mean, this is just look at this. This is oh my! Just wait a second. Let's go to the weekly chart. Because in all honesty, look at this. This is unreal,
God,
right?
What a parabola.
Is that Amazon or Bitcoin?
This is, in all honesty,
it looks like Bitcoin.
In all honesty, just think about it. I mean, we all admire and we, of course, we realize that Amazon is like a huge powerhouse of retail sales, and it has done amazing, and it's almost monopolized like several sectors. There's no question about it, and it has a X business model that's extremely successful. So nobody can deny that. But in all honesty, right?
Yeah, what was the 09 low? 08, 09 low, $5?
In all honesty,
get your compass out.
Yeah, in all honesty, is this sustainable? How many times have we seen in our lives this thing? And how many times has it ended in a different way? You know what I mean? Just look at this. I mean, it's
Bitcoin.
It's completely vertical at the moment, right?
Put Bitcoin next to it, same time frame.
Same time frame is not going to work, mate. You know, because
they didn't have
it. We would have, unfortunately, I'm not sure that TradingView allows that, but what we would have to do here is put Bitcoin on and then manipulate the time frame on Bitcoin to actually, but look at this. In all honesty, it's just vertical. Yeah, it's
I think I'll have to sell my 100,000 shares today. Take some off.
You know that we're good friends, right? So if there are any leftover, you can send them over to me.
All right.
Okay, don't forget your friend in Greece.
Better to sell them before it becomes wallpaper someday.
But you're right, it is diverging actually.
Yeah.
So far, it is diverging. It is diverging. But to be very honest here, it was also diverging very clearly on the RSI. Just look at this.
Yeah.
Let me mark it.
Right.
Here.
Yeah.
Very, very clear divergence. Very, very clear divergence. Did it play out? Yes, it did. It did produce some kind of a weakness. But look at it. It's just shrugged it off. Pushed to new highs. So
perhaps.
But we don't have an indication yet that this series of just higher highs and higher highs and higher highs. I'm not talking about lower lows because obviously higher lows because obviously we've been having higher lows as well. But at some point obviously this is going to break. But so far,
I have to get a tissue. I have to get a tissue. This chart is giving me a nosebleed.
Yeah, more or less. Yeah. But by the way, speaking of it, Netflix hasn't produced a new high here, but we have to be very honest. Netflix seems to be in a consolidation that for the time being we have no reason not to treat as a bullish one, right? Yeah. So what's this? This might be a triangle that's going to eventually break to the upside. Which other stock should we?
Facebook.
Nvidia. Just look at Nvidia. Nvidia, I was monitoring this, but I didn't have a second point. But here it is now. We do have. So to be honest, Nvidia might be in the same situation that Nasdaq is more or less. I mean, this does look potentially as an ascending wedge, doesn't it? And just look at this channel. Just look at this ascending channel.
Oh yeah.
It's just crazy, right? It's just crazy.
Yeah, but you see how it's lagging? NASDAQ 100 and everything pretty dramatically. You know what else has started to lag, which is a little different the last week or so? It's a Russell.
Look
at NASDAQ,
I showed
it.
I showed it.
Oh, okay.
Just look at Facebook. Yeah, just look at Facebook here. Perhaps a larger ascending wedge as well here, right?
Yeah, shorted.
I mean, all those are like insanely bullish stocks, but all of them look like nothing in comparison to Amazon, right? Amazon is like a pure parabola. Yeah.
I think Apple's has a weaker structure in the fangs. It's probably got the weakest.
Let's have a look at it. You know something, as you see. Same deal with Facebook here as well. I mean, this also. So as you see, it's not an accident. It's not by accident that the Nasdaq is producing something that looks like an ascending wedge at the moment, because there is a decent amount of the important stocks of the Nasdaq that are actually showing more or less an equivalent pattern, right?
Yeah, 4 or 5 of them make up, I think, 90% of the market cap.
Yeah, so that tells you everything you want to know. Yeah, that tells you everything you want to know.
Yeah.
Other stocks that you want us to have a look at, Dale?
That's good. That's fine.
Good. Okay, so, I do see some signs in the market that momentum has waned, and, it doesn't look like it, that, new highs are going to be sustainable for a long period of time. That's why I'm more or less cautious, and I'm taking it one level at a time. You know what I mean? Because in all honesty, after like a 9-year uptrend and seeing some signs of momentum loss, and also seeing some signs that globally, we've started getting some fundamental and macroeconomical jitters, right?
Yeah, look at China. Look at China. That'll tell you something.
Yeah, exactly. So, I do think that this is a period of time that people should start being a lot more cautious, having to do with the bullish trend. You need to still respect it. There is no question about it, because this bull trend has killed a lot of bears, right? It has annihilated a lot of people. I remember at the beginning, it was one of the most hated ones, because nobody could actually accept the fact that after such a big event like the great recession that we had in 2008, we would get to see such a huge and one-sided uptrend. But later on, it became more or less accepted. But now it's extremely mature, and somebody has to acknowledge that. Anyhow, I have a question for. We have here Martin. Martin, yes, we did cover, by the way, the DAX. Just to give you a one-sentence review, between soft support and resistances at the moment, 12,400 and 12,600. A break of either should extend. Martin also says earnings: Facebook 25th of July, Amazon 26th of July, Netflix 16th of July, Google 23rd of July. Netflix reports earnings today after the close. Yes. Martin, you're right, actually. We have a question about USDR. Let's have a look at it. And actually, go ahead, Dale.
July 27th is a total lunar eclipse. So I'm just telling people that so they put Pink Floyd on Dark Side of the Moon. July 27th. Pink Floyd, Dark Side of the Moon. You know that song, Steve?
Oh, yeah, I do.
Pink Floyd? Okay. All right.
Martin. So USDR, I was looking at this formation. I said that, when we break down, we should see a correction to at least 1340. There was also a possibility of one more push to the upside before actually breaking down, but I did believe, that we're very near a high. Now we've also broken below 1340, and we're approaching the next area of support, which is here at 1312, 1330, roughly here. 50 DMA is also converging. I do think that if we break that level as well, we should see the next move being down at 1280, right? So I do think that if we do break below this next area of support, things get more serious. So pay attention to this.
I do think these levels are going to tell us, all we need to know about the next move. Yeah, we have a question about the USD Swiss. Listen, I'm not that convinced about the USD Swiss that this was a false break higher, because I've seen many people say it was, right? And the reason I'm not convinced is, yeah, we did get a new high, but in essence, on a daily closing basis, we did hold this resistance once again. But on the other hand, we had a very clearly defined triangle here. Theoretically speaking, this incremental new high satisfies one more push to the upside, but practically speaking, as long as we remain above this triangle's resistance, I would assume that there is a good chance that we're going to find support here and push higher towards 1018 once again. So, I'm going to still remain somewhat bullish until proven otherwise, right? So only if we break down below 98.50, 0.9850, I'm going to be then convinced that this was some kind of a false break higher. Until then, I maintain somewhat of a bullish bias in the USD Swiss. Do we have an interview, by the way, today, Dale?
We do. Yeah, we do. Yes.
Okay, so I've already started bleeding into it. Okay, so then go ahead and start your interview. People started posting some press questions as we speak about euro crosses, etc. I promise to you that we're going to have a look at them first thing tomorrow. So thank you, Dale, and
You're
see
welcome,
you all.
buddy. Okay, Rohit, I'm going to make you the presenter now. Stick around to hear and see Rohit Shrivastava, Twitter handle at India Charts, and here they are. Hi, Rohit.
Hi, Dale. Thank you for having me.
Oh, very, very nice to meet you. Thank you so much for coming in today.
Thank you so much. Love to be here.
All right, so why don't you tell us how you got involved in the trading business? Were you an engineer first?
No, I was a student of commerce and accounting, and then I did my management and finance, my MBA in finance.
Okay.
And while I was doing all that, before I did my MBA, I did work in the markets for several years. In fact, I started tracking the equity markets from 1990 onwards when I was still in college, so I was around 18, I think. And and at that point of time, I was simply tracking prices. I didn't know charting as a science was around, and once I came around that, then I started plotting charts manually. And software in India was not available in the early days, but once it became available, I became a user of MetaStock, which I still use. And from 94 onwards, I started working professionally with the Wall Street Journal, which was a publication that covered equity markets. And later on, after I did my MBA in finance, I worked with portfolio managers, and I've been almost now 18 years with a broker that is Sharekhan Limited. And as you know, I actively write and blog since the year 2000 on mostly, initially it was Indian markets, but I kept writing about various markets, but I have now increased my exposure to currencies and commodities since 2012, where equities became extremely fractured, even in India.
All right. So you have, I see your slide or setup, what you have for an alternate scenario in euro. So would this imply that if we are going to get a rally up towards, it looks like B is up around 121.5 or so, does it mean we have to have a full-blown retest of support levels at 115 for that to happen?
Okay, so this is my alternate scenario and not my preferred. So I'll just take you through a series of charts on the dollar and euro, which would probably highlight my overall view on it, because I think the dollar index itself is largely made up of the euro, and therefore it gives us the big picture. And of course, we have much more historical data on it. So one of the first things that came out glaringly to me in my study a couple of years back in trying to understand whether the dollar bull market that we were in would continue much longer, or whether it would come to a screeching halt because sentiment had reached an extreme. You found almost over 95% people bullish on the dollar in late 2016, and that got me to look at this cycle wherein the dollar index has followed a typical cycle of being in a bear market for around 7 years and in a bull market for around 9 years, a couple of times since the 1980s. And so that's what I plotted here. Once I did that, so my understanding was to look for the end point of this current cycle that we are in, whether it would complete an ABC structure or not. And that's where I think most elitations have debated whether there's one more leg up left or one more leg is not left. So I've concluded that this move is complete in terms of its 9-year cycle. It's A, B, and C. And we've started what should be a 7-year-long bear market for the dollar. So we are essentially in the initial waves of that bear market, which could go far, far lower.
Okay.
The second thing is
interesting that numbers 7 and 9, they're both kind of numbers of completion. You know, even 7 years of plenty, 7 years of naught, and 9 is a combination of 3 threes. So interesting numbers. Do you look at significant numbers, or this is just what your research ended up showing you, and that's the way you believe the dollar cycles work?
That's right. My research just ended up showing this to me. I did not choose the numbers in particular.
Right.
So I simply took the year in which the high or low was made and found that it was repeating pretty consistently for this time period.
Okay. It doesn't tell you magnitude, though. It just tells you, have you measured, all the bear markets look to have been very substantial, right? As far as magnitude of the moves, the one in the late 80s and the one in early 2000 almost looks like there's bigger downside moves than recoveries. Does that tell you anything?
Well, visually on a logarithmic scale chart, as we're looking at this, it actually looks like while the declines are very sharp in magnitude, they might, and if I say magnitude in percentage terms, it might actually appear like the entire pattern is contracting. So a lot of people started to consider that this was some form of an ending pattern. Okay, something like this. And so it looked like a contracting pattern, and when it blew down there into 2008, it looked like this was a bottom from where you'd rally, break out, maybe have a significant bull market in the dollar. I'm sure some people still have that opinion. But when I look at it, I sometimes do this. I simply invert the chart and I say, well, this can also be a triangle that is bullish in nature if you get a failure, which is prices cannot really sustain above the 90 mark. So that becomes important from a long-term perspective, that this trend can change, and simply perpetually pushing something into a bull or a bear market might not be the right approach. So that's where I wanted to look at the internal structure. And so when I move to momentum and the internal wave structure, so I combine all the tools from technicals and elite wave analysis together to get a complete picture. So I'm just running down the momentum. Now this is the momentum on the quarterly chart, which has been in sell mode for most of the last 4 to 5 quarters. The RSI indicator here itself has not yet reached a deeply oversold situation. So my sense is this cycle is not complete. Also the momentum, which is basically your rate, it's a weighted average rate of change, similar to the KST, is not yet below the 0 line. Okay, and so I feel that cycle is probably not complete at the quarterly degree. On the monthly charts, while we have rallied quite a bit, we have stalled exactly at this previous swing high close to the 94.95 mark. And we've also stopped at what is the 20-month average, which is also at 94.95. And this also coincides with a 38% plus retracement for this entire decline.
So you have a great line in the sand for 2 different technical reasons where you have confluence there. What would you say if we had closes above 95?
Exactly, and that is why I had that alternate scenario, which was right in the beginning. My sense is that this rise is a 3-wave advance which is complete, and most probably wave 2 is done, and we should start the 3rd wave down for the dollar and probably up for the euro. But I would keep it as an alternate that if we do manage to develop a situation where we can get past 95, then probably we would head to 98 or 100 in a larger retracement of this entire decline before the third wave down can start. But right now there isn't enough evidence for it to happen right away. So the chances in the short term are that we are most likely to dip in the dollar first, because you've already completed, like I said, a three-wave advance, and you already got extreme readings in sentiment, which were just last week at around 94% bullish on the DSI, which gives me a sense that we would be at the end of this near-term move. And so we're looking at a dip, and if that dip ends up being impulsive in nature, then I would expect it to continue in the larger third wave down.
Okay.
Only if the dip follows and ends up being a corrective pattern would we consider that you can get that move up to 98, 100 in the dollar again.
Could you go to 92 first and then above 95? Your last slide, I'm curious what the dotted red line represents on the slide you had previous. Yeah, that dotted line.
Yeah, so this dotted line is the 20 period average.
Okay.
So in this case, this is the weekly chart. So I'm looking at the 20-week average.
Mm-hmm. All right.
Okay, so definitely it's possible that we dip to the 20-week average, and if we do find support there, and if that dip is a three-wave decline, then we should consider the possibility that we would go to 98, 100 before you come back.
Okay, great looks. Okay,
so on the daily chart, we've been developing some kind of a triangular pattern. We could have considered that this triangular pattern ended at the high that we made here almost 2 weeks back at 95.5.
Yeah.
But this decline that we saw in early July does not appear to be 5 waves. It appears to be 3 waves, which is why my sense is that probably this wedging pattern is not yet complete, and we can still make an attempt at 95 at the upper yellow line in the very, very near term.
Okay, so one more push up to shake out the 95.5 bears.
That's right.
Okay.
So with that, I move to the euro chart and the wave structure that I've considered here. I've considered that the entire move from 2001 to 2007-8 was an impulsive 5-wave advance, and since then we've completed waves A, B, and a 5-wave decline into wave C. A lot of debate occurs around this area 2014-15 as to whether the fifth is complete or you've still done 4 or 5. Now in case of the euro, you overlap, so it's no more possible to say that the fourth is still in development. And my sense is that the fourth wave here was a triangle, which is why it probably got overlooked, or it can also be a diamond triangle pattern, which is more a classical pattern which few observe.
So then you get a terminal thrust out of it, and that's it. So,
that's right.
Okay, so you had your terminal thrust at 103. You're counting the rally from 103 to 126 as 1, and now we're in 2, which implies a 3 is coming.
That's right.
Okay. All right. So go ahead.
So this is my primary count. Like I said, that we are in wave 2. Most probably A, B, and C is complete, and we will of course look at the next moves up. If they are impulsive or not, to really consider this alternate count that I started with.
Mm-hmm. Okay. So your business model is a subscription service?
That's right. I do a mix of writing a lot of free posts for my readers, which get published on my website and get sent out to my mailing list. And then I do write on a daily basis on all markets, global markets, usually in morning India time, and then I can cover stocks and the index in the evening time. So typically sending out 2 emails, but I write on a real-time basis, so they keep getting published as and when I observe changes in the market trend. And so people who want those daily updates, they would subscribe to my services.
Okay. So besides the dollar and euro, was there any other instrument you wanted to share with us today?
Okay, one chart that I will look at, since you were discussing the US indices, and that is of the NYSE composite index.
Yeah, and that's a lot different picture than the other ones, isn't it?
Exactly, which is why I looked at it, because when we look at the S&P, it tends to be relatively complex. And at the same time that the Dow is also lagging behind the S&P, I found that the NYSE composite tends to give a much clearer picture, at least this far, that the entire pattern from February to date looks like a triangular pattern, which means that the top end, which means we are in wave E, probably almost complete. The top end of this triangle is at around 12,850. And as long as we don't get past that, most probably we should be topping in this zone and starting wave C on the way down.
Okay. All right. And that's going to be, you looking for equality or a fib extension of that first A wave down?
That's right. We would always start by looking for equality.
Okay.
But I've often seen that when you have a wave B occur after a long-term top, then wave C tends to be extended. So I think we need to be open to the idea that it's an extended move, especially if this does mark the end of a fifth wave for the longer-term progression of the entire rise that we've seen in the NYSE. So if I do consider that this is 1, 2, 3, 4, and 5, and the fifth wave is complete, then most probable chances are that wave C down would not end at equality and would end up being extended.
Would that be the sign that there's more confirmation, it's more significant of a high? If you get, say, 1.618, would that be confirmation that this is not corrective anymore?
Yes, that would be a very, very meaningful indication that this is not a corrective decline.
Okay, I learned something from you today. All right, so an Elliotician's going to look at a fib extension and the degree of it to give him a market message of whether or not it's corrective or impulsive. 1.618 is more impulsive than equality normally, right?
That's right.
Okay.
And it's pretty amazing that this kind of pattern is already developed in the Hang Seng, which is the Hong Kong market. You already have a triangle, wave B and wave C. And we haven't achieved equality there as well. If we actually look for the lower end of the channel, then we haven't touched that point. And so far, we've come pretty close to it. And so that's also an interesting watch as to whether it extends or not. So which is why I've marked C, and I've also written 1 and 2 in case an extension develops, which would, as we discussed, indicate that a major top is in place.
Okay, is that one of the weakest indexes? I know the Shanghai has broken down as well a few weeks ago and looks to be suffering with all this trade dispute.
That's right. The Chinese index, of course, has been the weakest, but and it's taken most of, I think, the Asian market. So if you look, whether we look at Jakarta, Kuala Lumpur, most Asian markets have performed extremely poorly. The surprise within then the Asian markets is the Indian market itself, which I track on a daily basis, the Nifty. The Nifty itself has actually not declined that much, and so that would be the next interesting chart to actually discuss.
Okay, we have people that ask about the Nifty almost every day, so it's good that you're on because they're probably countrymen of yours, so would love to see your look there. And then I want to wrap it. I have one question for you after this chart.
Right. So. What I'm going to do is start with this comparative chart. You can see two on this. One is the mid-cap index and one is the Nifty. What has been happening since the top that we saw in the US market and in Indian markets, they more or less occurred at the same time in the last week of January.
Right.
And the broader market in India, the mid-cap indices and the small-cap indices are already down almost 20%. In fact, today itself, this is an updated chart. We've broken last week's low in one swing. But on the other hand, the Nifty has remained elevated and was very, very close to its previous highs, almost making what you may say is a double top.
Okay, so is the Nifty comparable to the Dow and the mid caps comparable to, say, the Russell or NASDAQ here?
That's right. You could say that. Though the mid-cap index is not made up of more than 200 or 300 stocks, so it's not a very large basket.
Okay.
The Nifty itself is just 50 stocks. But they do differ in the capitalization. So the mid-cap stocks are, of course, of a lower capitalization, and the Nifty is of only the large-cap stocks.
Okay, I wanted to ask you about one thing I saw on your website, and that's you write about the Indian economic winter. And I'm curious if this economic winter started when Modi made certain rupee denominations illegal and went through that period where people couldn't use their cash for a period of time and still can't. So explain to us what kind of weather you get economically during economic winter, because I think a lot of the world isn't even, that's not even on the back of their minds right now, with the market being at new highs and real estate values here in the States being lofty, and great employment numbers. So okay, so you use Kondratiev. All right, so we're just beginning this winter cycle in your view.
That's right. In terms of the Indian economy, the winter has been developing, I think, since 2010. So I'll explain that. I essentially used the work of from the Long Wave Group, and when I studied Ian Gordon's work, I think he put in a lot of detail in terms of how each of these cycles worked for the US in terms of interest rates, commodity prices, and equity prices. And so I took all of that and extrapolated it onto the Indian cycle. Now, of course, this is a backdated chart. Few people have seen. It comes from another highly rated analyst, much more older than me, Vivek Patel, who backdated all the way till the 30s that the data was available from the British Advisory and then the RBI index. And when you look at this, you actually see the progression as waves 1, 2, 3, 4, and 5. Now, people who don't have this back data usually think that waves 1 and 2 are over here, when this is the longest advance that Indian economy had, which is what they miss out on.
Okay.
So what has happened is after the boom that we had in 2004, and usually this is, so I've marked over here that this is the economic summer. Now, an economic summer occurs at the end on the back of a lot of high interest rates and inflation, like you saw in the US in the 70s into the early 80s. Okay, and then you raised interest rates and had control over inflation and interest rates for the next 2 decades. We had a similar situation, but almost 15 years later. India, after 1990 to 94, had double-digit inflation and double-digit interest rates. We have seen 15 to 20% interest rates at that point of time. A lot of people are not aware of that. And then we eventually got that situation under control by 2001, which is where our bottom bull market started on the back of low interest rates. And this boom has then since been going on. Now, India's corporate debt to GDP was extremely low at the start of that cycle, but as the government did not expand its balance sheets, the corporate sector kept on borrowing and reached an extreme. So since 2010, most companies that had high debt equity ratios have essentially not performed. They're almost down 50 to 80% since 2010 itself. So from a pure economic and stock performance point of view, the winter cycle starts from 2010, but what has happened is, as you see on this chart, I marked 5, the fifth wave has constructed itself into an ending diagonal. So now I've moved on to the Nifty 500 index to show you what has been going on. So the fifth wave during this entire time period, at the start of this period, mostly we did not believe that India had a problem of debt. Over the last 3 to 4 years since Raghuram Rajan was in he pushed banks to start reporting their non-performing assets, which they were not doing in the prior period. And it now has become apparent to most that we have an NPA problem where the banks, at least the public sector ones, have NPAs going to 10 to 15% of their loans. So that's become a big problem that we are dealing with, which is the clear signature of that we are in the winter cycle, and we need to deal with those debt problems, which is why the corporate sector, despite high rates of GDP growth that we are reporting, is unable to report a high rate of earnings growth. Even in the last quarter, we've actually seen growth not come in on the earnings side simply because of high interest costs. So this is the situation we are in. My sense is that the Nifty is essentially at the end of this fifth wave. We've most probably completed it in Jan for the mid and small cap indices, and are probably completing it now for the Nifty and the Sensex in the current week.
So any studies similar to what you did with the dollar, where you have, this is like the 9th year in the U.S. of a bull market, and then do you have like 7 years of a bear, or do you have any kind of time projections? How long this winter? When are we going to be able to take our boots and put our shovels away and come out and plant roses? Buddy?
The typical bear market in India historically has not been more than 2 years. The deepest one that we saw was back here, which was around 18 months. We've seen a maximum 2-year bear market once in the 1980s. So I wouldn't really project beyond that at this point of time. I would say if we peak, say in 2018, then probably the worst is over by 2020 for the Indian market as we unwind through this period.
Okay, can the economic winter go on longer than the financial market winter? Is that what you're saying?
Definitely it does. Definitely that's what happens. It's obvious from the study of the US market itself. From 1929 to 1932, you had the Dow bottom, but if you do an economic study, some would say that the winter cycle ended only by 1940. So the stock markets tend to extend on both sides, the upside and the downside. It's possible that, and my sense is that the stock market would probably bottom before the economic cycle, which is normal. More often than not, as EWI study itself shows that when you have a wave too low, it often occurs on weaker sentiment or worse economic data than the starting point of the next move up in equity prices. So yes, by the time you probably hit wave 2 of the next bull market for India, we'll probably be through the worst as far as the economic cycle is concerned.
What a great interview, Rohit. I'm so glad I reached out to you on Twitter. I encourage everyone who's watching us live to go to your website, www.indiacharts, and to follow you on Twitter. And I really do appreciate you giving us both the macro and the micro today, Rohit. Let's keep in touch, and excellent work in my view. You are now my trading warrior brother.
Thank you so much.
It was a pleasure. And thank you for sharing your wisdom.
It was a complete pleasure for me too. Thank you.
Thank you for sharing your pearls of wisdom with Face today. That's it, everybody. Twitter handle is @IndiaCharts, plural, @IndiaCharts, Michael. All right, everyone. Enjoy the rest of your day. See everyone for Turnaround Tuesday. And remember, don't just count your pips, count your blessings. Adios. Enjoy the rest of your day. Thank you again, Rohit.
Thank you so much.